Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning, hello and welcome. You're with us on Bazaar Morning Call and we're coming to you as always from the CNBC TV 18 Motilal Oswal studios. I'm Surabhi, with me Prashant and Nigel. And what we have is a pretty interesting setup because while markets continue to chug along yesterday, it's all eyes on the US Supreme Court and which way the judges are interpreting those tariffs. Will they be held up? Will they be entirely struck down? It seems that there is a bit of a disconnect right now between different judges and what they're saying. So that's one very, very important watch point. For us, of course, after the midweek pause, will the bulls get the mojo back? That's the question, because on Tuesday, the market had sold off and some amount of weakness was, of course, coming through. But otherwise, I mean, for what it's worth, as far as regular trading is concerned, we had a positive close on Wall Street yesterday, and most of the Asian markets are picking up from that handover. The implied open is telling us that we'll probably start with a 16-point upward bias. Well, Prashant's also with us. Prashant, morning. So lots of drama out of the US courts.
Absolutely. I was going to say a race to the finish, but it's race to the start for me this morning. I got stuck behind a dump truck, so it was racing. One of those days, right? Morning, and we'll just sort of pick up from exactly where we are, where we left off. And actually, there's 2 days of data to kind of take note of, right? So U.S. equities recovered a little bit on dip buyings, but sold off into close once again. Actually, yesterday's session is less consequential. The bigger session was day before yesterday, when actually US sold off hard, and then yesterday Asia sold off very, very hard. Kospi, Japan, etc. So, the 2 days change in that sense, as it'll come up, only tells you half the story. So S&P, 2 days, 0.2% lower. Nasdaq, still 1.4% down, despite yesterday's bump that we saw. VIX retreated about 5% to about 18.01, and it had jumped up sharply. Now, just two other names, right? Technology, AMD 2.5% higher. Results are better. Tesla was up about 4% or so. We got a new mayor of New York, and for a city election, I think it's got real global coverage in terms of what Mr. Mamdani represents or does not represent, what it means for the Republicans, for the Make America Great Again movement. I mean, just sort of lots and lots of print and ink on Mr. Mamdani's election. Now, President Trump, of course, blamed the Republican electoral losses on the government shutdown. And he essentially basically said that, well, it was not my name on the ballot. The other one, of course, is what Surabhi was talking about, which is the Supreme Court. Now, oral hearings began yesterday and these are appeals against the emergency powers under which President Trump has imposed all these tariffs since he took power. Prediction markets, betting markets really swung towards the U.S. Supreme Court invalidating President Trump's tariffs. And that is because key Supreme Court justices suggested that Trump had overstepped his authority. Remember, markets were kind of anticipating. It's a conservative bench, the U.S. Supreme Court. I mean, they're president-appointed judges, and it leans conservative. So the general assumption was that, it'll perhaps go... they'd kind of tough to do, but they'd back President Trump in some way. But after listening to some of these justices, markets are, I think, having a rethink. So the 10-year yields went up 7 basis points to 4.16. Remember, there is no end timeline to this in terms of when the judgment from the court has to come. Expectation is that it'll take at least till November or December for this to happen. But if these tariffs are deemed illegal, all this money has to be returned. So, you basically, the Treasury in the US is going to be that much amount of money short. And that's the reason why, I think part of the reason at least why yields were up 7 basis points in the front end as well. Several signs emerging, and maybe we'll go into this a little later, several signs emerging that the end of the US government shutdown may be around. It's already the longest running US government shutdown. But, and in no less part too, of course, the New York election perhaps may catalyze Republicans, and of course, President Trump also into action. Japan and South Korea, I was talking about the big sell-off yesterday, and I think keep an eye out on those two markets. Both have been huge outperformers this year. So recovering a little bit, as far as I saw about an hour ago, after yesterday's 2.5-3% sell-offs. And I'll just tie in the levels here. So markets on the Nifty on day before yesterday, which is on Tuesday, basically closed 1 point above the 20-day moving average. So 25,597 was the close, and we left off at 25,596. So that's a 20-day, which kind of becomes the pivot. And below that, very close by, is 25, almost 400 levels, which is the 40-day exponential moving average. That is a 25,388 number. And of course, the recent swing highs are the resistance figures. Unlike the Nifty bank on Tuesday did not make a fresh low. So there is a bit of a positive divergence as far as the banks are concerned. And here, we are not anywhere close to the 20, not that far away either, but not close to the 20-day. So the swing low of 57,482 and the 20-day are pretty much close by, which is 57,419. So those are support levels. GIFT Nifty gives you a quick sense of how we're likely to start, and we'll pick it up from there. 16, 17 points higher. Nigel has walked across to the wall with what's the F&O position for the market looking like. Nigel, over to you.
Well, yesterday was not such a bad day to have a market break, actually, because I was looking at the Asian markets and all of them are down. But however, we wake up to positive US market cues. So that's good news. Otherwise, yesterday, we could have been in some trouble. Now, it seems that global markets went into a bit of a flux. But maybe our markets preempted that, because in Tuesday's trading session, actually we ended at the low point of the day. And you were worrying whether or not the FIs were big sellers. That wasn't the case. So that's good, actually, because the FI sold 1,000 crores. That's lower than what we saw in the previous couple of trading sessions, while the DIs did buy close to around 1,200 crores thereabouts. Not just that, the Nifty ended virtually at the low point of the day. There was an element of Nifty weekly expiry that played out, but the VIX as well cooled off. It didn't spike up to any large extent, given that we ended at the low point of the day. What about the FIs? They remain net short. Close to around 85% of their positions are on the short side. But if you can just pull up a chart on the screen, you'll see that the FI short positions have gone up by more than 40% since the start of the series itself. So we're at around 1 lakh contracts odd. Now we're at close to around 1.4 lakh contracts. So massive shorting has taken place, which is a good thing. You wanted some shorts in the system. You've got some shorts in the system. Clients have done the opposite. We were mentioning at the start of the series that they're net long, but the long positioning is not to the extent that we've seen in the past. They as well, just take a look at the long positioning. Clients have piled on the longs, so now they're at close to around 1 lakh contracts on the long side, which is up by more than 35%, from the start of the series itself. What about the FIs and stock futures? Well, they added some short positioning, unwinding some longs as well, which brings us to the options data. A few sessions ago, the PCR had moved to around 0.62, and from there we did see a bit of a bounce. Now that PCR has moved back up to around 0.9, so it's basically in the middle of that range, 0.6 to around 1.5 or thereabouts is what you've seen on the PCR. And that's because a couple of strikes were very, very active. So the 25,700 call, fairly active in trade. 25,600 put as well, fairly active in trade. And this is important because there will be some writing that's seen at around this 25,600 put. And we ended at around the 20 DMA. So you don't want this 25,500 level to break at all. If you're an adventurous trader, you'll actually want to get in around these levels and keep a 100, 200 point stop loss. So this is an important mark for today's trading session. You don't want this to get violated. On the upside, 25,800, that's been a bit of a resistance zone. So that's the level you're looking at. The Nifty bank should come up for you on the screen as well. The 20 DMA is close to around 300-400 points away from current levels. So on the Nifty bank, that's the level that you want to track, close to around 400 points away from current levels. I'm going to be looking at two stocks today. One is Hindalco, because they've gone ahead and they've increased their capex guidance big time in Novelis. Street will not like that, could be under pressure. And I'll watch it to see whether or not there's a relief rally coming in on Asian Paints as well as Berger Paints. There's a resignation at Birla Opus from the top boss out there. Both these stocks in focus, and Nomura notes is just coming in there. They have upgraded the sector itself, both Asian Paints as well as Berger Paints. So these could be in focus.
Okay, all right, got that, Nigel. So we'll keep those stocks on our radar, plus many others and lots of interviews lined up as well. So